Hi, I'm Diane Devani with Pacific Ridge Realty.
And I'm John Cohen, president of Qualified Financial Inc., a local mortgage broker.
And this is the Weekly Five. Today, I wanted to ask John, who's been in the mortgage business for over 20 years, for some information that could be helpful for people. I'm working with a family now on a home purchase, and there are definitely some do's and don'ts, John, when someone is buying a home. And would you be willing to share some of those with us?
Of course.
Great.
So exactly the do's and don'ts. So in preparation to buying a home, whether a first-time home buyer looking to sell a property and want to buy something else, you need to be properly prepared, right? You want to make sure that you're in a position that's going to be to your best interest. Okay, so I'm going to give you a couple examples here that I wrote down. So some of the do's is you want to see exactly what it is that you qualify for, right?
Mhm.
And how you're going to do that, you're going to first speak to a mortgage professional, whoever that may be. Okay, that person is going to gather your information, basically take an application, gather your information. They're going to look at your credit, seeing if there's areas for improvement, right? See if there's credit cards that we can wait to get paid off, ways to pay down certain credit cards to improve the FICO scores, ways to rescore your credit to get you a better interest rate to qualify for even a lower payment and a
And
lower.
that's something
Yeah,
amazing that you do for your
yeah,
clients. So
I
that's,
absolutely do.
yes. And your clients are very lucky to have you because that's not something that most brokers do.
I like to go above and beyond, but here's an example of that. Someone has a six, interest rates are FICO score driven. If someone has a 669 or 699 FICO score, and I know that through a couple of series of small things that I pay for an extra service with the credit bureaus to be able to figure out it's called a what if simulator. What if I do A, B, or C? What would it do to my credit score? So this tells me exactly what we need to do to get the scores over 700. So if we get the difference between 699 and 701 is huge when it comes to
Wow.
mortgage. Better yet, 700 to 720, plus is a big difference. So if I can find an area that we could pay down one account or two accounts down by a couple $100, and we can get ourselves up above, or my clients above 740, it's going to make a huge difference in what they qualify for and the interest rate they're going to get. So
Hmm.
that's number two. The next thing that we're going to look at is their assets. Okay. And then, of course, income. Okay. So we're going to determine at that point, I or the mortgage professional will determine exactly what the borrower or the person's going to qualify for. And then we will issue you a pre-approval for a purchase price up to X. So you know what the max purchase price. And then you will get in touch with your real estate professional, and that person will have a piece of paper to be able to go out and start shopping for you. Okay. So that's the do's. The don'ts. Don't open any new accounts, such as credit cards, furniture stores, department stores, any new kind of credit at all. Don't do that when you're even thinking about buying something new. It's number one, because that will lower your credit scores just by the inquiries. Okay, that's number one. And it also, as you open accounts and you start buying things and putting things on these cards, there'll be payments associated with them, which will raise your debt to income ratio and affect what you qualify for. The next thing is don't make any large purchases. Okay, don't go out and buy a car. Don't go out and take another loan out on another home that you might own, or anything of the sort. Number three, don't quit your job, please. Right? Don't hold off on switching your job. Don't change your career if possible while you're in the process of doing it. Can't tell you how many times that has actually killed the loan process while being in the middle of doing a purchase. So make sure you don't do it. Sounds crazy, but it happens. The other thing is and the last thing is don't make any large deposits into any of your accounts. Don't be moving money around because these all have to be sourced. Banks need to know where this money is coming from, and it can add a bunch of extra paperwork. So if you're considering buying and you're having somebody's family member is going to be giving you money to help you buy the property, don't have them deposit it in your account at all. You're going to speak to the mortgage professional and they will give you very specifics on how to move that money around. It's got to be
Yeah.
strategic. So that's the do's and don'ts for today. If anybody has any questions in regards to them getting pre-approved, more than welcome to reach out to me. My information and phone number will be at the bottom of this email or this video. If you have any questions in regards to looking at properties, obviously you can always reach out to Diane. Her information will be there as well. That being said, until next time, we appreciate all of you, and I appreciate you, Diane. Okay.
I appreciate you too. Take care.
Okay. Take care. Have a good day.